Hello everyone, myself Dr. Vinay Gandhal from KMC College Khopoli. Today I'm going to talk about capital and revenue. Means today we have to learn about capital expenditure as well as revenue expenditure, capital receipts as well as revenue receipts. So dear students, in any types of business organization there is a incurrence of some expenditures and incomes. Even funds are always required to carry business activities, and there are many business activities which leads to raise certain amount of expenditure and receipts. So here businessmen need to identify what are the capital expenditure and what are the revenue expenditures which is actually incurred in the business organization. So dear students, whatever activities are going on during the accounting year, that is to be recorded properly in the books of accounts. For example, there are business activities, there are investment activities, trading activities, and financing activities, which leads to raise the capital expenditure, revenue expenditure, even capital receipts and revenue receipts. Generally, business activities gives rise to revenue income as well as revenue expenditure. Means whatever income or expenditure derived from the normal business activities all are called as revenue income or revenue expenditure. Investment activities also always going on in the business organization. So whatever amount invested or whatever amount earned by using investment activities are also called as a capital expenditure or capital receipts. The third activity, that is called as financing activities. Financing activities also leads to raise capital receipts. So the businessman may earn certain amount of money as a finance from the financial institutions or banks are always called as capital receipts. And if any financing activities are undertaken and whatever amount spent by the businessman, that is also called as capital expenditure. Dear students, these are the various business activities which is incurred in the business organization and are to be recorded properly in the books of accounts. So to know that there are two financial statements like profit and loss account and balance sheet. So the profit and loss account is the summary of revenue income and revenue expenses. In short, whatever expenses shown on debit side of profit and loss account are all called as revenue expenses, and whatever incomes are shown on credit side of profit and loss account are called as revenue income. Another statement, that is balance sheet, is the summary of capital receipts and capital expenses. So whatever assets and liabilities are shown in the balance sheet are recorded in the books of account as assets and liabilities, and which leads to raise capital receipts and capital expenses. Means there should be a proper recording of all types of incomes and expenditure, either capital or revenue. Okay, and now we are going to learn about capital expenditure. Dear students, normally capital expenditure is popularly known as capex, and it is the money spent by a business or organization on acquiring or maintaining fixed assets such as land, building, and equipment is known as capital expenditure. Dear students, normally whatever amount of money spent by the businessman on acquisition of fixed assets or capital asset is called as capital expenditure. It is normally non-recurring in nature because businessmen normally purchase the assets is for long period of time. It has some future benefits. So now we are going to learn about some characteristics of capital expenditure. Okay, so each capital expenditure has a long term benefit. Means what? Whatever amount spent by the businessman on acquisition of capital asset is always for a long period of time, and businessman always expected some future benefit from that asset because that asset or each asset has an estimated life and it is to be used for a long period of time, and businessman is getting some benefits by use of that all the assets. So each capital expenditure has a long term benefit. Capital expenditure is normally derived from investing activities. So whatever amount spent or invested by businessmen in the investing activities for a long period of time is called as a capital expenditure. Capital expenditure is always recoverable. Whatever amount invested in capital assets for a long period of time, normally it has a future benefits, and during the entire period of that life of that asset, the businessman can getting certain amount of benefits from that assets. It means the amount of asset is recoverable during the entire period of estimated life of that asset. So it is normally said that capital expenditure is always recoverable. It is non-recurring in nature. Means capital expenditure is not incurring continuously or day to day. It is not a normal business activity. Generally, capital expenditure incurred when it is required. For example, if a businessman want to purchase a machinery, then he can spend certain amount for purchasing or acquiring such a machinery. But keep it in your mind, capital expenditure is made when it is required. That's why it is said that capital expenditure is non-recurring in nature. There should be a disclosure in final account. Means whatever capital expenditure spent on fixed assets, it should be shown in the balance sheet, not in the purchases. So it should be properly recorded in the final accounts. Okay. Then there are some examples of capital expenditure. Now we are going to see some examples of capital expenditure. For example, acquisition of fixed assets means some normally for acquiring a asset, businessmen need to spend a certain amount of money, and it is always for a long period of time. So acquisition of fixed asset is the example of capital expenditure. Then whatever expenses that improve standard of performance of existing assets. If any amount of money spent by the businessman for improving the standard or performance of existing assets or assets those are actually already exist in the business is also called as a capital expenditure. Another example, that is cost of addition or extension to an existing asset. If businessman made some changes or if businessman reconstructs some assets by spending certain amount of money, So the total value of asset will increase. So in that case, whatever amount spent on the addition or extension to an existing asset is also called as capital expenditure. Investment is also the example of capital expenditure because normally people are making investment for a long period of time, and it has always some future benefits. Okay. Then cost of acquisition of intangible assets. So intangible assets also the part of asset. It means the assets which cannot be seen, which cannot be touched, but there is a asset. Sometimes businessmen need to spend some amount of money to acquire intangible assets, and it is also the example of capital expenditure. Okay. Cost of acquiring and development of wasting assets. So there are many wasting assets and that can be used for business purpose. For example, um, mines, oil wells are there. So in that case, businessman always giving royalties or receiving royalties. Okay, so whatever cost has been incurred by the businessman for acquiring such wasting assets is also called as capital expenditure. So these are the some examples and characteristics of capital expenditure. We have to identify, or it is must for all of us to identify to see the exact nature of expenditure while determination of expenditure as a capital or revenue expenditure. Okay. Next type of expenditure that is called as revenue expenditure. Dear students, revenue expenditure means the amount of money spent by business or organization on ordinary business activities on which no future benefit is expected. Means whatever expenses incurred by the businessman during ordinary course of business or during normal business activities which has no future benefit, but there is a means incurrence of such expenses is must for carrying normal business activities. Okay, it has some characteristics. Normally revenue expenditure is derived from normal business activities. Just keep it in your mind, whatever amount spent on normal business activities is always treated as a revenue expenditure. Maintenance of assets, repairs and maintenance are there, servicing charges are there. So whatever amount of money incurred by the businessman for maintaining the assets during the ordinary course of business is also called as cap revenue expenditure. Revenue expenditure is not recoverable because it is normal activities and it is necessary for the businessman to incur such expenditure for running the business activity. So it cannot be recoverable. Revenue expenditure is always recurring in nature. Continuously, such type of expenditures are incurred, and normal business activities are continuously going on till the end of the business. So, continuously there is a incurrence of such normal expenditure, or just imagine whatever expenditure we are showing on debit side of profit and loss account is called as office and administration, selling and distribution expenses. So whatever such expenditures are there are all called as a revenue expenditure because though which are incurred during the normal business activities. Revenue expenditure reduce funds and profits. So if revenue expenditure increases, then we are posting it on debit side of profit and loss account, and proportionately our profit will reduce. If we want to make some expenditure out of funds, then in that case the funds also reduced by making such revenue expenditure. There are some examples of revenue expenditure like maintenance of assets, wages paid to workers, utility expenses, selling expenses, rent expenses is there, audit fees paid, printing and stationery, insurance premium. Just keep it in your mind. Whatever expenditure regularly incurred continuously in the business organization during the entire normal working condition is also called as revenue expenditure. Okay. Next term of expenditure, that income, that is capital receipts. Now we are going to see about capital receipts. So dear students, it is the amount received by a concern in the course of its financing activities. Means financing activities leads to raise capital receipts. It has some characteristics like capital receipts are derived from financing activities. Financing activities means issue of shares, issue of debentures, loan from banks, term loan from banks and financial institutions. So whatever amount of money or fund taken by the businessman from the financial institutions or banks is always called as a capital receipts, because it is taken or it is received for a long period of time and it is not recurring in nature. Okay. Capital receipt is not returnable. Sorry, capital receipt is returnable. When businessman taken a loan from the bank, then he is liable to repay the loan to bank during a stipulated period of time. Even in the case of issue of debentures, issue of preference shares, there is a fixed amount of period or fixed period that is called as a maturity period. So at the time of maturity or at the time of a specific period specified by the businessman, company or businessman need to repay such amount of money to the debenture holders, that is called as a redemption. So it is a returnable. Okay. It is non-recurring in nature. It is not continuously going on. Capital receipts affects on funds and profits. If any amount of fund raised or if any amount of finance received from the banks or financial institutions, funds may increase. Or if any funds utilized by the businessman in the business and earn a certain amount of money, so in that case profit will increase. So depending upon the nature and policy of business or utilization of funds, it affects on funds and profits. There are some examples of capital receipts like cash brought in the business by the proprietor. So in 11th standard, normally you have studied the entry like cash brought by businessman or cash deposited by businessman for starting a business. So whatever amount of cash brought by proprietor or businessman for starting a business is called as a capital, and it is for a long period of time. So that is also called as capital receipts. Loan from bank is also comes under the term of capital receipts. Sale of old assets. So whatever old assets sold by the company, so whatever amount received on sale of old asset is called as capital receipts. Sale of shares which is held in investment also comes under the category of receipts. Issue of shares and debentures. Okay, so these are the some examples of capital receipts. So we must understand the nature of such receipts for determination of capital receipts and revenue receipts. Now we are going to learn about revenue receipts. So dear students, revenue receipts is the amount which is received by a concern in the ordinary course of business. Means whatever amount of money received by the company during its normal business activities like uh, sale of goods, rendering of services, means amount received from sale of goods or rendering of services is called as a revenue receipts. Whatever dividend received, commission received during the year is also called as a revenue receipts because it is continuously going on and it is from normal business activities. It has some characteristics. Revenue receipts which is normally derived from business activities, that is called as normal business activities. It is non-returnable. Whatever amount received by the businessman from sale of receipts or rendering of services, it cannot be returnable to the concerned person. It is always recurring in nature because selling activities are continuously going on. So continuously businessman may earn certain amount of money as a income, that is called as a revenue income, and it is continuously going on till the end of business. So it is always recurring in nature. Revenue receipts affects funds and profits. It increases funds as well as profit. There are some examples of revenue receipts like sale of goods, means amount received from sale of goods, rendering of services, interest received, whatever interest received on investment or fixed deposit. So we may receive interest monthly, quarterly, 6 monthly, or yearly. So whatever amount received, it is the activity which is continuously going on. That's why called as a revenue receipts. Dividend received, royalties, it is a periodical payment received by the person from the user of the asset. So these are the some examples of revenue receipts. Okay. In short, it is said that revenue receipt means the amount which is received by the businessman during ordinary course of business or during normal business activities. Okay, dear students, now we are going to study about some illustrations that will help to you for identification of expenditure as a capital expenditure, revenue expenditure, or capital receipts, revenue receipts. Okay, so the first example, that is state whether the following expenditure or incomes is capital or revenue, expenditure or income. Give reason. So in that case, just we are going to see a few examples. So this is the first example. The example is cost of replacement of a defective part of machinery. So in that case, we need to identify whether there is expenditure or income, and whether if it is expenditure, whether it is capital expenditure or revenue expenditure. So transaction is about cost of replacement of defective part of machinery. So here the cost incurred for replacement of defective part of a machinery And in this example, machinery is to be treated as an asset, and whatever amount spent on acquiring or purchasing of asset or maintaining the asset, so is called as a capital asset, and the expenses also called as a capital expenditure. Okay, but in the case of this example, cost of replacement of defective part is come under the category of repairs and maintenance. So whatever repairs and maintenance cost incurred for maintaining machinery in good working condition is called as a revenue expenditure. Okay, so replacement of defective part of machinery is comes under the activity of repairs and maintenance, and it is a normal business activity. So answer is this cost, replacement cost incurred for machinery is treated as a revenue expenditure. Second example, expenditure incurred in preparing a project report. Dear students, it is the expenditure incurred for preparing a project report, and normally project reports are prepared for a proposed plan or proposed business activities, and normally it is for long period of time. If project report is executed, then it create a asset. So in that case, whatever expenditure incurred on preparing project report is called as a capital expenditure. Okay. Third example, that is commission received on sales. So dear student, in this example, selling activities are the normal business activities. Continuously sales activities are going on, and as the selling activities are continuously going on, so sometimes salesmen or mm, persons may get certain amount of commission as prescribed by the higher authorities continuously. Or even in the case of businessman, if businessman received a commission on sales from the other parties, it is also called as a normal business activity, and it is derived during the normal business activities. So whatever amount of commission received is recurring in nature, and it is to be treated as revenue receipts. Okay, the next example, that is sale of old machinery. So dear students, in this example, machinery is asset and which is sold, and whatever amount of sales received by way of selling of old machinery is the receipts. Okay, but the provision is that amount received by way of sale of capital asset is called as a capital receipts. So in this case, the answer is capital receipts, and reason is sale of old machinery is called as a capital assets, and income derived from these activities is called as a capital receipts. Okay, so these are the few examples which will help you to identify the nature of expenditure, either capital or revenue, even nature of receipts, either capital or revenue. Thank you.